Katie Stockton, let's go to the charts and talk about some of your favorite stocks heading into 2016. And the first one is Coach. That stock's up around 13% just in the past month. Quite a few upgrades on Wall Street. So tell me why you like it.
Well, there's been a real mean reversion trade going on in the market where the underperformers in the first 3 quarters of the year became outperformers since the end of September. So Coach is one of those types of names where it's really a turnaround play. And what we've seen Coach do is build a basing phase on its chart. It does appear to be breaking out as we speak, really, from that basing phase up about a couple percent today on back of the Fed announcement. So to see that follow through would be very positive. Of course, follow through on back of a base breakout. And really momentum is improving there, and also the relative strength versus the broader market. So I think it's promising.
And speaking of breaking out, Facebook, that's had a great year. Stock's up around 35% this year. It's one of those FANG stocks. Can it continue that momentum in 2016?
Well, it's a very different chart, of course, than the Coach, isn't it? It's a long-term uptrend, and it has this very distinct character to it where it tends to stair-step higher. The other FANG stocks are very similar to it in that sense. And really, you want to just be mindful of the fact that it does tend to absorb overbought conditions very well. So this recent consolidation phase that we've seen, to me, has allowed it to absorb overbought conditions without a meaningful correction, and that's really a testament to the long-term uptrend. So I'd be looking to add exposure into this consolidation phase to position for the next breakout in Facebook.
All right, and speaking of meaningful corrections, Deere is a stock you like. That stock corrected this summer. Worries about commodity prices have really pulled that stock down. It's stabilized now, but can it get better in 2016?
It's that stabilization that I think is really the important point there. So it has been an underperformer over the recent months, and more recently we've seen some momentum improve there. Intermediate term momentum has flipped positive for the first time in months, and I think that's telling. It suggests that it is a turnaround play, something that investors who like oversold buying opportunities, they might reconsider it, and it's not quite as risky as, say, a typical energy stock that really is trading even more closely to crude oil.
And then finally, Biogen also had a summer meltdown along with a lot of other biotech stocks. You think this one is going to do well next year? Why is that?
I think so, especially in the first quarter. The biotech stocks in general really did underperform, and especially over the summer in Biogen IDEC, where that underperformance to me really was so swift, right? It just sort of washed it out, and now we've seen another base building process where the stock has started stair-stepping higher within that basing phase. And again, this week we're seeing a breakout above short-term resistance on the chart that really holds promise to me for momentum to continue to improve and really preserve the long-term uptrend there.
All right, we're going to watch those stocks and those charts in 2016. Thank you, Katie.
Thank you.
And thank you for watching The Street.